Welcome to Trend. In this video, we'll be going over how to use TB Pro and TO Panel. The goal of this video is to help you understand how each indicator works and how each indicator works together, and how to find good confluences and good trade setups, but also how to identify weak and false signals. So first, let's start with TB Pro. So TB Pro, again, to open TB Pro, you would go hover over TB Pro, hit the gear wheel and click settings. Same thing with TO Panel, hover over and click settings. In this case, we have our sensitivity setting, our direction setting, AI mode, color schemes, and then our other indicators right here. First, let's start with the buy and sell signals. So the buy and sell signals are our indicator to help you with confirmation of the trend. Buy and sell signals should not be used blindly. They should not be used by themselves. They should be used in conjunction with the EQ cloud, reversal cloud, dynamic support and resistance, our other indicators. They should never just be the only thing on your chart. They are simply just another tool in the tool set to help you find the overall trends and confirmations of the trends. Now, with buy and sell signals, you have the ability to adjust how many buy and sell signals you see on the chart at a given time. As you can see, we have the lowest sensitivity setting right now set. We have tons of signals on our chart, creating a lot of noise and creating a lot of weak signals. So a lower sensitivity is going to result in more signals and weaker signals. A higher sensitivity, such as 2.0, is going to result in less signals, but stronger signals. We always suggest starting at 2.0 and then adjusting down or up from there. However, if you don't want to have any control of sensitivity and you don't want to worry about it because you're adjusting between timeframes doing multi-timeframe analysis, we have AI mode. And when you enable AI mode, it's going to automatically and dynamically change the sensitivity for you to help you stay in the trade the longest, but it's also going to give you a take profit. So as we can see here, with AI mode enabled and our direction being buy, which we'll talk about the direction in a minute, but with AI mode enabled, we have our buy signal and our take profit signal. Note, if there isn't a take profit signal, that's what this blue line represents. This blue line represents take profit, and we also have the signal that will appear as well. These gray dots that you see right here, that represents the buy signal when it closed. So again, buy and sell signals aren't confirmed until they closed. So while the candle is forming, as we can see here, we have a candle forming and there's 7 minutes and 20 seconds left on it. While all these candles are forming and a signal appears, the signal can go away. However, after the candle closes and we move on to the next candle, this signal is here to stay. And you can see that signified by the gray dots and the candle as well, or with the signal as well. Next, we have direction. So we believe that the trend is your friend, and we have an indicator called volatility, support, and resistance that's going to help you identify the overall trend, among other things. So first, let's turn on volatility, support, and resistance. So we have two different lines, or two different colors for our volatility, support, and resistance. We have a green line, which is overall bullish, and a red line, which is overall bearish. This indicator has three functions. First function is it shows you the overall trend. If the line is green, that means we're in an overall bullish trend. If the line is red, that means we're in an overall bearish trend. The second function is going to show you is the overall volatility of the current trend. So if the line is green, the jagged lines mean the overall bullish volatility. As soon as the lines flatten out, that means bullish volatility has died off. If the line is red and we have jagged lines, that means bearish volatility is high. And if the lines get flat, that means bearish volatility has died off. This helps you identify with our momentum indicators when volatility dies. You're going to probably most times see sideways, horizontal trading, consolidation when volatility has died off. And these are areas you should avoid trading as much as possible because there's just no volatility and there's no momentum during those times. The third function this indicator has is if it's red, it acts like a resistance, and if it's green, it acts like a support. So as you can see here on our Bitcoin 15-minute time frame, we have a red line forming. That means we just broke our support level. This does work with multiple time frames. So if we go to the 4-hour, we'll have a different 4-hour trend. Overall, we're still bullish volatility. If we go to the 5-minute, for example, we're going to have an overall bearish trend, which you can see with this red line. So when you do multi-time frame analysis, which we'll talk about later in this video, this will help you identify multiple trends that are happening on larger time frames and your smaller time frames to help you identify the new trends and the current trends that are happening to help you find the perfect trade setups. Next, let's talk about our EQ cloud. So the EQ cloud is going to help you identify the overall momentum. If the cloud is nice and wide, as we can see here, nice wide cloud, a nice wide cloud, that means momentum is strong and or high. If the cloud is nice and thin, if the cloud is nice and thin, as we can see here, that means momentum is weak, and you're usually going to see consolidation, ranging, sideways movement, horizontal trading, and those should be avoided as well, which you can pick that up with our volatility line indicator. So if you pair just the EQ cloud and the volatility line together, you can identify weak areas of volatility or low areas of volatility, low areas of momentum, helping you identify potential horizontal trading areas. If the candlesticks are above the cloud, that means bullish. It means it's overall bullish momentum, overall bullish trend is happening. If the candlesticks are below the cloud, that means bearish momentum is heavy, overall bearish momentum at that time. And then when the candlesticks get in between the cloud, that means we're seeing horizontal trading, again, sideways trading, ranging trading. And again, that's just areas you should avoid trading. So that's one area or one way, the EQ cloud and the volatility lines, to identify weak signals. So as we can see here, we have some buy signals and some sell signals. Typically, we want to take these sell signals. So if we turn the sell signal on, typically we want to take these sell signals because the overall trend is bullish and these are just pullbacks, right? And we'll help you identify the pullbacks as well. But again, typically if we're in an overall bullish trend or overall bearish trend, you're going to have pullbacks happen, and that's what these are. These are just pullbacks, and you should avoid trading those and just trade within the overall trend. However, we also have buy signals in here, and the overall trend is bullish, but volatility is weak and momentum is weak. And there's most likely a resistance and a support down here, which we will identify later and talk about with our dynamic support and resistance. But for now, just with the EQ cloud and volatility line, we can identify that we have weak momentum, weak volatility. We should just avoid trading this entire area at this time. So to recap, our EQ cloud is a momentum indicator built with a lot of EMMAs built into it. It's going to help you identify the overall momentum and if how strong that momentum is. So again, if the candlesticks are above the cloud, that's overall bullish. If the candlesticks are below the cloud, it's overall bearish. If the candlesticks are in between the cloud, it's ranging sideways. It also acts like a minor resistance or a minor support to help you identify true pullbacks. So as we can see here, we had an overall bullish trend happening. Bullish momentum was strong. We come up and touch the cloud. If it doesn't break below the cloud, it's touching a minor support, and it will continue on downwards, showing us that this was just pullbacks. To identify a true reversal is when we come down, hit, have another drop, and when it actually crosses over and the candlesticks get above the cloud and we have a line going up or a line going down, depending on the direction, which we'll talk about this in a second, that means we have a true reversal happening and the bulls have taken the lead or the bears have taken the lead. So over here, same scenario. We had some consolidation, weak momentum. However, we had a turn over here, and the only difference here is it kept going down and we tested support. So overall, we have strong bearish momentum happening here. Still an area of weak momentum and weak volatility overall. As we can see, we're pulling back up, meaning we probably bounced off of support. And we'll talk about this later in our video to identify how to enter this trade right now based upon what we're seeing. So again, the reversal cloud, haven't talked about that yet. It's going to identify overbought and oversold for you. So if the candlesticks are in between the cloud or in the cloud, it's overbought. If the candlesticks are in the cloud below, it's oversold. So let's talk about what overbought and oversold means. Overbought simply means that the buyers have exhausted themselves. Oversold simply means that the sellers have exhausted themselves. This does not mean if we're oversold, we're going to see a reversal, or if we're overbought, we're going to see a reversal as well. It simply means that the buyers have exhausted themselves and the sellers have exhausted themselves. So as we can see here, in this scenario, where we broke the bearish trend and we came up. We broke our volatility line, which was resistance, and our new trend was bullish, and the candlestick stayed above the cloud. So we can identify if we entered here, we did have a take profit here, but the momentum continued upwards. We're still on this trade. We broke resistance. Overall, we're still having strong momentum. We can identify that we're overbought here because our candlesticks go sideways. So when we see these candlesticks go sideways, that just means that the bulls are taking a break. To identify if we're actually going to see a true reversal happen would be if it actually breaks below this cloud. So if it breaks below this cloud right here, if it would have broke below here, that means we would see that drop down, but it held support here and we continued upwards. Again, hit resistance here, and we tested support, continued upward, we're overbought again, tested resistance, came down, broke through support, and then we saw our ranging happen. So as soon as we come down, we test our cloud and we have our first candlestick right here below the cloud. That means overall the bullish momentum is at an end, or the bearish momentum is at an end, depending on your direction. So for example, in this scenario, we can see with the overall bearish trend, we were overall bearish, we hit the cloud, came in, had some good sideways movement for a little bit, hit the cloud again, came back up, some sideways movement, and we just saw a trend reversal. Whereas here we had some sideways movement and we had a bullish continuum from here all the way up, and then we went sideways once again. So again, to recap, EQ cloud, that's our momentum indicator. It's going to help you identify the overall momentum. Pair that with the reversal cloud. The reversal cloud is going to help you identify overbought and oversold areas. But if we keep above the EQ cloud, even though we're overbought, as long as we stay above the EQ cloud, we're going to have strong bullish momentum continuing in that direction. As soon as we break through the EQ cloud for bulls or break through the EQ cloud for bears, that's when we're going to see that reversal happen, or that, not necessarily that reversal happen, but we're going to see the bulls or the bears start relaxing. Typically, we'll see a reversal or horizontal and sideways trading. So for example, over here, what we're seeing right now, let's just take the volatility line that we have, the EQ cloud and the reversal cloud. We had a sell signal. We broke our support. We have a few things happening down here, which we'll talk about later, but we broke our support, hit that resistance, or hit that oversold. So right now we're testing that EQ cloud of resistance. If we can hold here and come back down, that means the sell signal is strong and we should see a bearish continuum, and we've broken out of horizontal trading. Because currently right now we're still horizontal right here. Overall, we are testing that support. If we can hold this EQ cloud and continue on downwards, that means the bears have this, and we'll see it continue on downwards on Bitcoin. Next, we have our dynamic support and resistance. So this is all based off historic values. And as we can see here, we have a support, a resistance, and it's all based upon historic values. And what we mean by historic values is it's going to only appear once a few touches have been made. So with support and resistance, let's talk about how to identify what support and resistance is. So support and resistance is simply, resistance is buyers hit a ceiling and they can't break through it, so we're going to see it pull back down. Sellers hit a floor, they can't break through it, so they're going to pull back up. You can identify that simply by the wicks here. So we had a wick here, came back up, so they hit an invisible floor. Again, they tried breaking through it here and here, and they couldn't do it, meaning the bears or the bulls kept it and continued it upwards. We had another test here and another test here, couldn't break through it, continued upwards. And again, now we're testing it again here. And for our resistance, we had a test here in this area, right? We had this massive wick up here, but most of the wicks are right here. So testing in this area, testing in this area, and testing in this area. So to help you identify those, we have our historic dynamic support and resistance. And that's going to help you identify those support levels and those resistance levels. And we don't have a support line here, but this line does act like support, and we can see here it does reflect what we see here. And this is going to work on any time frame as well. So if we go to the 4-hour time frame and you want to see what does the 4-hour major supports and major resistances look like, we don't have any 4-hour resistance, but if we go back to the 15-minute, we can identify that there is a resistance up there, and we can also identify by what we just learned that with these wicks, that means the bulls hit a ceiling, and we can draw out our own line as well if we really want to, and there's our resistance line. We can also draw out our support lines and simply say in here for our support. And then we can take this back to our multi-time frame analysis, go to a smaller time frame, 15-minute, and now we can identify that there's a resistance here. It reflects our 15-minute resistance there, so we could technically just delete that. And now we can see we have our 4-hour support, which is reflected by, there's another 15-minute resistance here, so we could just delete that as well. But with multi-time frame analysis, all that is you're going between the 4-hour, 2-hour, other time frames. You're not just using one time frame, you're using multiple time frames, like the 4-hour, 2-hour, and 15-minute. Personally is what I use. So I'll go on the 4-hour time frame, see the overall trend, which is bullish on Bitcoin right now, even though on the 15-minute we are seeing a pullback. And I'm gonna respect that. And then we have our support levels here. Go to the 2-hour time frame, see if I see anything different. We have our resistance up here, which I'll draw right here again. And I'll call this 2-hour resistance. And then if I go down to the 15-minute time frame, I will simply just delete this if I need to. Have our 2-hour support. And there we go. And we can also identify that we have a 2-hour volatility support right here. And we'll just call this 2-hour V support. And then we can go to the 15-minute time frame. We can see we have our 2-hour V support, 15-minute, 15-minute, 2-hour. And if we really wanted to, we can break it down to the 5-minute. And that's just what multi-time frame analysis is. It's using multiple time frames. So we can see here, we're breaking above the EQ cloud on the 5-minute time frame. And like I talked about before, that EQ cloud is a form of small resistance. On the 5-minute, we are breaking above. So most likely on the 15-minute, if it can't break above the EQ cloud, we can see on the 5-minute that the bulls are picking up. And we could see it come back up and just retest some areas up here. And that is why multi-time frame analysis is important and not just looking at one time frame the entire day. Next, we have Harmonic Zag. So we're going to clean this up just a little bit to talk about what Harmonic Zag is. So I have 2 other tabs open up here. And for Harmonic Zag, it's going to help you identify the higher highs, higher lows, lower highs, and lower lows. And what that is it tells you higher highs and lower lows, and higher highs and higher lows and lower highs are typically a form of resistance or support. As we can see here, we hit a higher high, that's our resistance. We have our 2-hour volatility support here, lower low, that's our support. In our trend FAQ, which is available to anyone, you can go down here. We have our trend trainer, and we also have everything about our other indicators written in format here. But we go down here, we can go to enter the charting technical analysis. We're always adding more to this. Go to our chart patterns, and we have our ascending, descending, and horizontal channel that we've been talking about. And you can use Harmonic Zag to help you identify with the touch points about where the overall ascending channel is, or potentially the overall descending channel, or the potentially the horizontal channel can be identified with Harmonic Zag. Now, Harmonic Zag used by itself isn't going to be powerful like any of our indicators. We need to use multiple indicators together. If we turn on our tunnel vision indicator, which is our linear regressional indicator, that's going to help you identify potentially a new descending channel or ascending, and this line moves in real time, or horizontal. So as we can see here, the channels are moving downwards, and we can identify that with our higher highs, lower lows, and higher highs. And then if we wanted to bring out a trend line, because we don't want to have our linear regressional line on anymore for some reason, we can identify a new channel that's happening here, put that away, and we can see, clean it up just a little bit here. We can see our new descending channel. Now for a descending and ascending channel, let's just talk about that real quick since we're here. The only way for that to work is you need 2 touch points. 3 touch points to fully confirm, but two touch points to get started. So here's our first touch point, and our second touch point, our first touch point, and our second touch point. Without 2 touch points, you're not able to fully confirm if we're in a new channel, in the new direction of it. So wait for 2 touch points, but as soon as you have 2 touch points, and that's just rejection of one, rejection of another, rejection of one, rejection of another to get you that lower low and that higher high, then you can form a higher low or a ascending, descending, or horizontal channel by identifying it with TradingView's trend tools or charting tools. Anyway, back to trend, just a little bit of technical analysis training. Linear regression is going to help you identify the ascending, descending, and horizontal channels, and it's going to move in real time for you. Also, we have a line up here and a line down here. This top line is overbought and this bottom line is oversold. And then we have our parallel line. Typically, it's going to move in between here, right? That's how a channel moves. It's going to move within this channel. You might see the channel move, and as this continues to move downwards, you're going to see it move downwards with it. If at any point it gets above or below, that just simply means we're overbought or oversold. And we can compare that with our reversal cloud and pair that with that, and that will help us identify true, overbought, and oversold. Give it a second to load, and we can see that we were oversold and overbought here. We were also overbought here, and that just helps you identify that, hey, we could see a pullback happen, which we did see it happen, and then we actually saw a massive change. We're starting to see that descending channel happen, and that will help you identify where the trade is going and where the trade has been to help you predict where the trade could go. And then you can add dynamic support and resistance with this, and this just helps you identify true supports, true resistances with the higher highs. Like, yep, there's resistance. Our higher high hit it. When the higher high forms, historically, we can't look at it right now. We can look at the lower low. So when the higher high formed, we hit resistance. We were above the channel. Those three confluences right there, higher high, hit resistance above the channel, will help you confirm that we're going to see it drop down. Same thing with the lower low. Hit lower low, hit the bottom of the channel and hit a support, or it made a lower low, hit the support and hit the bottom of the channel. We're going to see it pull back up. Typically, not typically, when it's below this line, it's overall bearish. When it's above this line, it's overall bullish. Keep that in mind. We've already talked about volatility, support, and resistance. Just to recap it though, since we're back on it, it has three functions. If it's green, overall bullish trend. If it's red, overall bearish trend. So it helps you identify the overall trend to help you identify if we're in an overall bullish trend and we have these sell signals, hey, avoid these sell signals. They're just pullbacks. And if you're in an overall bearish trend and you get those buy signals, hey, avoid those buy signals. We're in a bearish trend. Now, obviously, we were in an overall bearish trend here and we had a good reversal happen. We're going to help you identify how to get in on this early to see if this is a pullback or a reversal. And we kind of talked about it earlier with the EQ cloud, but again, we're going to talk about that at the end of this video in our strategy session. So just to recap, volatility line, overall trend, overall volatility, acts like a support and resistance. Next, we have safety mode. So safety mode is a confluence strategy built within trend, and it's only going to work if, well, it will work without volatility, support, and resistance, but it works in conjunction with it. So in our current direction, we have buy enabled. We have safety mode on and volatility, support, and resistance. So the only signals we're going to get is buy signals if the overall trend is bullish. We will not get any buy signals if the overall trend is bearish. And we can see that also reflected in the sell signals. So if we do sell, if the overall trend is bearish, which there hasn't been any, if the overall trend is bearish, you're going to get those sell signals. Now, we can see here, even with safety mode on, that this was a horizontal scenario. So we wouldn't have traded this anyway because we were horizontally trading. We would have avoided these signals buy and sell because we had flat volatility, flat momentum, and we were just trading up and down between a dynamic support and resistance. Trend dashboard is going to help you identify, or is going to help you visually have everything on a dashboard, and you can't move, so the dashboard is stuck there. It's not a movable dashboard, but it's going to tell you the current signal, which is a sell signal, right? The overall trend, which is bearish. Trend movement, which is average. It can be overbought or oversold. Trend volatility, 65%. So bringing that into the picture, if the volatility is flat for the bulls, but it says 70%, that means bearish volatility is pretty high right now. If this just signifies that bullish volatility is dead, this signifies all the volatility. So if we're at 65% volatility, that means if bull's volatility is dead, the bearish volatility is pretty high. And anything above 60% is great volatility, great trading range, 60 to 100. So yeah, just keep that in mind. People ask that question. Anything above 60%, I would say stay above 70, but anything above 60% is high volatility. Trend mood is normal. We have fearful or optimistic. And then we have short-term trend, which is the 1 minute to the 15-minute time frame. The intermediate trend, which is 30-minute to an hour. And then the long-term trend, which is 2 hour to a day. Then we have adaptive take profits, which is reflected by your current buy or sell signal direction. So in this instance, we have sell enabled. We'll enable adaptive take profit, and it's going to give us our entry, our 3-to-1 stop loss, and our 3-to-1 take profit. If we were to turn the buy direction on, again, avoid trading against the direction. But if we do turn the buy direction on, we're going to get buy for this buy signal, entry, 3-to-1 take profit, and a 3-to-1 stop loss. So before we move on to the TO panel, my chart typically looks like this. I will use the Harmonic Zag and Tunnel Vision to help me confirm any confluences I need based upon if there's not a resistance up here, I'll turn Harmonic Zag on a Tunnel Vision. If it's like a newer resistance area, to confirm confluences, and I'll just use it to help me confirm overall trade setups. But just to keep it less noisy, I keep them off, but then I add them when I need to confirm some other new technical analysis things with my overall trade setups that I'm looking at. Moving on to TO panel. TO panel is right down here. It'll be at the bottom of your bottom of your chart when you add it. We have our momentum indicator. So just like the EQ cloud, we have our momentum indicator here as well. And this is going to help you identify how strong or how weak bullish or bearish momentum is. So again, just like the EQ cloud, if the cloud is nice and thin and the candlesticks are nice and thin, that means momentum is weak. If the candlesticks are nice and wide, that means momentum is heavy or strong. And same thing for bears, nice and wide, heavy or strong. Dark green or dark red simply means strong bullish momentum or strong bearish momentum. Light green means bearish or bullish momentum is dying. Dark red or light red means bearish momentum is dying. So bullish momentum dying, bearish momentum dying. And that's all that means. So use this in conjunction with the EQ cloud when trying to figure out how strong momentum is. If the candlesticks are small and the EQ cloud is thin and small, this can help you identify that we're ranging or consolidating. We can also use this to help us identify if we're truly going to see some ranging happening after we had a strong bullish momentum. We can see here, and we'll talk about this a little bit more in depth later, but we can see here on this candlestick where we go light green, we didn't have it any time before when we came through. We had some light green here, take that back, but we can see that that will help you identify that there's a pullback happening, testing support, momentum continued on, had our light green, continued downwards, and then we got small candlesticks, meaning bullish momentum was weak and we're not going to see it increase anymore. And we can see that reflected with the EQ cloud because it goes thin and sideways, and we can confirm that with the momentum indicator because it gets small and light green. Next, we have our divergences. So we have R, and that can be green or red, and then we have an H right here. So let's talk about the R. So it doesn't matter what color it is. If it's R, it just means regular movement. And that simply means that momentum has been detected by our indicator. And if it's red, we're going to see a bearish movement happen. Or if it's green, we're going to see a bullish movement happen. Doesn't necessarily mean we're going to see a full push up or a full pull or a full, bullish takeover or a full bearish takeover or trend change. It just means we could see a pullback. But here you can see what the R formed. The R formed here, and we did continue upwards. The R formed here, and we did continue downwards. So keep that in mind. We did have our R form here as well, and it continued downwards. These connections simply mean that momentum's carrying over, and on this one as well, we had it come down. So right here. And then the H, let's talk about that. That's just hidden momentum. That's all that means. So that's smaller momentum amounts. That's where you're going to see more pullbacks happening. So if you're looking at the sell signal, we have that green H. That just means we're going to see a pullback happen. It may be a strong bullish pullback, but we're not going to see anything like we do with these R's. And even with this R, we can see that there was just weak bullish momentum. Even though we had a green R, it just wasn't able to carry it forward, and we were just in that horizontal trading area. Next are pressure lines. So the pressure indicator is a great indicator. Probably one of my favorite indicators when it comes to adding confluence to your trade setups. Let's talk about what it is first. So pressure is simply buying and selling pressure. So it's all real time, just like our other indicators. The white represents buying pressure. The blue represents selling pressure. If white is above blue, it means overall bullish pressure. If blue is above white, that means overall bearish pressure. Now, let's talk about one other thing before we get moving into this, and I don't want to forget it. If the line is above 0, that means it's overall bullish pressure still, and if it's below 0, that means it's overall bearish pressure. This can also help you detect pullbacks. So as we can see here, we had our cloud come up. Even though we had a bluish crossover, if we stay above that 0 line, that's just going to signify a pullback to us. If it gets below that 0 line, that can confirm that we're going to see some stronger bearish pressure or momentum. But we can see here it crossed over, crossed back up, continued on, and then we did have that bearish crossover. It got below, weakening bullish momentum, hit that support level here, which we can see reflected, and continued upwards, and then bullish momentum retook up, and we got above that line. EQ cloud reflected with strong bullish momentum. Volatility line picked up volatility. We broke that resistance and continued on, or we had a fake breakout here, rejected downwards, and then we actually broke out here. But volatility stays strong, pressure line stays strong. So that will help you identify pullbacks. It can also help you identify potentially new trade setups when those crossovers happen. So when you see these crossovers happen, you can typically identify that we're going to have a bullish trend change or potentially a bearish movement happen. As we can see here, this was reflected as well. Bearish, drop down. And we're going to talk about this in our strategy today about how to identify strong setups and how to identify weak setups. Pair the pressure lines with a squeeze indicator. You're going to have a very strong system happening for you. So a squeeze simply means that the buying and selling pressures at equal stats or stasis right now, not stasis, at equal movement. Think of it like football or a game. They're in overtime. Buying and selling pressure is someone's trying to win, and that's what a squeeze means. We're just waiting for somebody to win the squeeze, and currently buying and selling is at an equal. Now, that's what the white dots signify. So the white dots can also help you identify if we're, again, in consolidation and ranging, if we're in sideways movement, or if we're going to see some momentum changes. So white dots, thin cloud, thin momentum, no volatility, all signs of ranging, consolidating, and sideways movement to help you identify that we're ranging, consolidating, to help you avoid those trades. We're trying our best over here to help you avoid bad trades and help you get into good trades. That's why we have all these indicators for you. Now, to identify who's going to win the squeeze, that's where the pressure lines come into. So if we have a pressure line crossover and we're in the middle of a squeeze, but the pressure line gets above the 0 line and we're still in that squeeze, but pressure is increasing, typically when that squeeze pulls off, you're going to see that direction. So you can already determine the direction of the squeeze as the lines go up or as the lines go down. So in this moment right now, we're in the middle of a squeeze. Pressure is currently overall bearish, but we are seeing some sideways pressure, meaning there's not a lot of momentum for the bears or bulls, and we're just going to see that weaken out. So potentially for Bitcoin, for the remainder of this video, we could see us just trade in this support and resistance area and be choppy. That is possible for the rest of this video, as we're in the middle of a squeeze and the pressure lines are sideways. So again, if the pressure lines are sideways and small, just like our EQ cloud, that means we're seeing some raging, consolidating, and we're just waiting for either a drop down or them to break above and get above that 0 line. And then for the last part of this, we have our dashboard, which can help you identify everything you're seeing on here: bullish pullback pressure, possible bullish reverse pressure, and weak bearish momentum. Helps you identify visually what's happening here. So if you just need some word confirmation, that's what the dashboard is for. And typically this is what my dashboard looks like when I'm trading with TO or trading with trend as well. Let's talk about false signals. And we've talked about that a little bit through this video. And hopefully as we've gone through this video, you can see how each indicator works with one another, how the EQ cloud worked with the reversal cloud, how we can use dynamic support resistance together, the overall trend indicator, the volatility support and resistance, the squeeze pressure lines, how everything works with one another, and why we shouldn't just use one indicator, but why we should use multiple indicators to help us find strong setups and weak setups. So now let's identify weak signals. So weak signals are typically identified in horizontal trading or against the trend. So if you're looking for a selling opportunity on Bitcoin and the overall trend is bullish, these sell signals should be avoided. If we're looking for a buying opportunity and where the overall trend is bearish, these buy signals should be avoided. However, this is a strong setup, and we're going to talk about that in a minute. But again, main rule of thumb, 90% of the time, if we're if the overall trend is one direction, they'll trade against the trend. If we are seeing horizontal trading, and that can simply be identified by even just our support and resistance lines and our EQ cloud, right? We just turn all this off. And we can see here with our support and resistance, we can draw a rectangle. And here we are. We had a breakdown below the horizontal trading. We're going to call this a fake breakout for now, unless I can hold this EQ cloud and continue us downward. But this would be horizontal trading, upwards trading. And this isn't going to be pretty, but this would be an ascending channel. And again, we need 2 touch points, but I'm just trying to get my point across, and that's descending. So these are good trades, and this is bad trades. So if it's sideways movement, try to avoid that as much as possible. If we're in a full bullish or full bearish trend, those are good trades to enter. And that's weak signals right there. So let's look at a few historical weak signals on Bitcoin. We'll move over to SPY and possibly gold, just to give you guys some reference points on different tickers. So again, we had some weak trading here. Even though the overall trend was bearish, we can see here, even though there's no support and resistance line anymore, we can see here that there was a support and resistance line. And remember that red line does act like resistance, so we can identify that these wicks are support. We're just going to draw a rectangle here. This should all be avoided. Now, in this scenario, let's talk about this scenario first, and then we'll move on. In this scenario, this trading should be avoided. The buys and the sell signals should all be avoided. They're all weak signals. Nothing's happening. Weak momentum. EQ cloud is showing weak momentum. We're also just ranging in between a support and resistance. All signs of horizontal trading. Now, we did have a massive uptrend, right? And we continued upwards for a good $1,000, $2,000. How do we identify that this is actually happening, and how do I get in on this if I'm not looking at my computer all day? Great question. So TradingView offers us a few options. One, we can draw horizontal lines, and we can draw out our rectangle channel first, and then depending on where you want to put your line, I'll put it here, I'll draw it red, and then I can do add alert, do crossing up, and you can do only once per minute, or once per bar, once per minute, or once per bar close. Once per bar close is simply going to alert you when this bar closes, just like our other alerts. If this bar closes and we close above that bar, you're going to get that alert. And you can do notify an app, show a pop-up, send you an email, send email to SMS. You can alert the name and stuff like that. We have a whole other video on how to set up alerts, but just for this scenario, I'm trying to teach you how to catch these horizontal breakouts. You would just set an alert. So then when the alert goes off, you can look at your phone, you can look at your tablet, look at your laptop, whatever device you have handy on you at the time. And then you can do these next few steps to identify, is this a strong signal? So at the time, we're going to turn replay on. And let's say we broke above here. So you're looking at the chart, and this is what you're looking at currently. So we broke above the resistance line. We broke above the volatility line. We have a new green line forming. Pressure lines are going downwards. Strong bullish momentum though. And we are over above that 0-0 line. And there is currently not a squeeze happening. Great, all good signs. So we have our buy signal. That's our first level of confirmation. Our second level of confirmation is our candlesticks are above the EQ cloud. If our candlesticks are above the EQ cloud and the EQ cloud is actually making an upwards shape, as we can see here, upward shape, that's good. That's a good indication. We've had buy signals in the past, but they weren't an upward shape. They were more of a slope, right? And that's how we can identify weak movements. Here you can see this is a strong shape going downwards, kind of like this, but it was more thin going down, and we are also still in our range. So we wouldn't have actually used this until we broke below, and we'd use the same kind of setup here for identifying a breakdown. But for this breakout, that's what we're going to focus on first. We broke above the resistance. The EQ cloud was strong. The candlesticks were above the EQ cloud. Now let's talk about candlesticks. If you don't know how candlesticks work, candlesticks are simply shown by how much money is being thrown into one candlestick or how much money is being taken out of a candlestick. If the candlestick is nice and big, as we can see here, that means bulls are throwing a lot of money in, and they're actually trying to get this going up. If candlesticks are nice and small, that means there's not a lot of buyers happening right now. And that can also help you identify that there's just no buying pressure or selling pressure, and nobody wants to be a part of this. Now we have wicks or shadows, and that's what these lines are right here. This line here, this line, this line. That is signified by the candle was this big at one point, right? The candle was that big at one point. But in this scenario, the bears brought it down and got it down to be here, brought it down to be here. So the bears brought this sideways because they were trying to keep the overall Bitcoin to come down in this scenario. Now, if we continue onwards, we had another candle here, and then that big candle right there is going to be our main entry candle, is what I would call it. So we have, let me go through this entire scenario one more time as we're going through this. So we have our EQ cloud or our candlesticks are above the EQ cloud. We break resistance, you get that alert. These are what we would also call testing candles as well. So they're testing the resistance, trying to see if we're going to stay above it, make it a support. And this would be the entry candle because it's a nice big candlestick. We did break above resistance, and now momentum is huge. We can also see here that the bullish pressure is increasing. White got above blue. On our indicator over here, bullish pressure, overbought pressure, strong bullish momentum, overbought momentum. But we're keeping it going upwards, and then that will continue upwards for the foreseeable future. So that's how you identify coming out of a breakout in that scenario. So if we're in a horizontal trading, you just set yourself an alert here. And then if you want to make sure you have the information for a sell, same thing, you set an alert, based on the support level. And then if it breaks below support, you do the same thing. But in bearish terms, if the EQ cloud is nice and thin or nice and wide, candlesticks are below it. We have our testing candlesticks because they're gonna come up and test our support level and see if they can come back up and get back into the horizontal range. And we're going to have our testing candles and then our one big sell bearish candle. And let's see if we can identify that. Also, the other big thing is our volatility line was nice and jagged the entire time. Definitely on this testing or on this entry candle, you can see that reflected with our volatility line, and momentum was nice and wide. And we continue on upwards. Now let's go look at what's currently happening with Bitcoin, and then we're going to move on to SPY. So currently with Bitcoin, we have a range, and this would be what we would call a fake breakout. So in that scenario, we had a true breakout for the bulls. For the bears, we had a fake breakout, and we're still in the middle of a squeeze. So currently in this situation, we are testing our EQ cloud, which is our minor support. We did come down and test the support level. We weren't able to break through, so the candlesticks came above. So in this scenario, even the sell signal would have been strong going downwards. We rejected or we broke through support. The biggest key factor here is we would have bounced off support here or here, and we did bounce off support here. So if we were in this sell for a scalp, this would have been our take profit. To be honest, I would have taken profit here because we bounced off support levels there, and then we came up, found a new entry point, and so on and so forth. We also are in the middle of a squeeze right now, so we're just trying to wait for what's going to happen with Bitcoin. But in this scenario, there's no good option to enter a sell based upon what we're seeing. We're still in a horizontal trading. It was the breakout didn't happen. We came back above. If we could, like I said, see it just trade in here. So right now, what we're going to wait for is if we break above resistance or break below support in this scenario, or we may just form a new horizontal trading channel. So currently that's what we're waiting for. We're going to wait for it to break above 2730 or 2570 in the future after this video to see if it breaks out. We're going to wait for that squeeze to pop off and move forward. But overall, this would have been a semi-strong sell signal, even though we were overall bullish trend, because that was some good profit taking. Personally, wouldn't have traded it just because it's against my trading rules. I don't trade against the trend. I only trade on breakouts. So I would have traded based upon either a break here or for sure a break here. And this would have been the actual area I actually would have waited for, even though because we broke below volatility support, there was another support level not that far apart, maybe $100, and I would have waited for that line to break. Next, let's move on to SPY before we finish up this video. And just look at SPY going into today. So here's buy. So let's talk about this real quick. And again, we're just gonna go over false signals and strong signals. There's nothing else in the future of this video. I will also have 2 strategy videos about more in-depth false and strong signal breakouts. But just for anyone that's watching this video, as the information is now new in your head, I don't want you to have to go watch another video if you don't want to, or you can watch those videos for more in-depth overview of false and strong signals. But in this scenario, we have a ranging movement. And the reason I don't use this top part here is we had a touch point here and a touch point here and our touch points here. This is more of, not even more, this is it did break out. There was a strong breakout momentum and it brought it back downwards. Now we can identify this either by going to a 4-hour time frame and seeing if we have resistance up there, which we don't. So we're just gonna move on. Go to a 2-hour time frame. So no, it was just a breakout. Bulls weren't able to get it above, and that's just the scenario in that moment. How to avoid a trade like this if you think it's a breakout? Biggest thing would be looking at our overall volatility, which was still weak. So the bullish volatility in the scenario was weak. We had strong bullish momentum. We did break above 385, which was resistance. Bullish momentum was semi-strong. The biggest factor here is the volatility line was flat, showing us bullish volatility was weak in this moment. And then to confirm our suspicions, we have that R form here, showing us that we're going to have a bearish have some regular movement for bearish momentum coming, which did happen with this exit signal. So the biggest thing here is looking at the volatility line to confirm if that bullish momentum would continue on upwards. But overall in the scenario, we had our bullish trend, strong bullish signals. Avoid this trade and avoid these trades because that's just you're trading against the trend. So you would avoid that, you would avoid that, and you would avoid that, and avoid this. In this scenario over here, again, you would avoid it. Personally, my preference and my recommendations for trading a breakout or breakdown is waiting for us to break above a resistance, which was what this was at one point. We had a fake breakout, it came back down. We can counter that by looking at our volatility and seeing how that looks. We can also counter that as I'm looking at this as our pressure lines. So we can see here, our bullish pressure was strong going up. We tested that resistance, but the bullish line started the pressure line started to weaken and they were already going downwards, even with momentum up. So overall volatility and those pressure lines, they weren't able to keep up. And that shows us a weak breakout or a fake breakout or a weak breakout, and it came back into the horizontal trading. So again, my preference as I teach our traders is wait for a breakout above resistance, confirm pressure lines look strong, volatility looks strong, momentum looks strong, and then same thing for support, look for a support break below. In this scenario, nobody would have been able to enter this trade as it's 3 o'clock. If you're an options trader, if you're a Forex trader, you could have entered this trade and it would have been a good trade going down. The only thing is we tested a support level down here, or they made a new support level down here, and we can see that reflected by this wick over here. And that's the other thing, looking at your bigger time frames, we can see that there was already a wick test over here, and that tested there as well. So we can see that support and a support level minor. So I'll do like a dotted line. So minor support, but it still did test and come back up that overnight. And then we had some news take us above on Friday, broke that resistance. Now, I want to break this down just a little bit about how to stay in this trade. So some people like to scalp trade, totally great. Some people like day trading, some people like swing trading. The reason I emphasize multi-time frame analysis is we have a lot of traders in trend. A lot of you like to look at the 1 minute time frame and you enter, where is this? 8 o'clock. You enter, which is a great entry, right? We had our resistance break. Everything looked good. We broke above our horizontal on the 1 minute time frame. We broke above. EQ cloud looked good. Pressure lines looked good. We kept above that support line. The biggest thing here is the reason I would avoid looking at the 1 minute time frame after you enter is because you're going to have all these sell signals and all these pullbacks, and the 1 minute is very volatile. My recommendation, go to the 5 minute time frame after you've made your entry and use the 5 minute time frame for your exit strategy, or the 15 minute time frame, because as you can see here, We broke above, and on the 1 minute time frame, you already would have entered here. So you got a good entry based off the 1 minute time frame. Now you can see we have a resistance here and a resistance here. You already got $2-3 movement right here. We break the resistance because we kept above the EQ cloud. Pressure line stayed strong. We broke that squeeze. And now throughout the rest of the day, you don't have to worry about leaving the trade. You just have to monitor it because the overall strength is strong bullish momentum. Then you can take it to the 15-minute time frame, and just to confirm as the trade's happening throughout the day how strong bullish momentum is, and then take it back to the 5-minute time frame for the remainder of your time. So usually you're going to be on the 5-minute time frame. I would suspect if you're trading off the 1 minute time frame, use the 5-minute time frame for your exits, use the 1 minute time frame for your entry, and then 15-minute time frame for your overall analysis if you're a scalper. And we'll do more swing trading and day trading analysis later, but I just want to talk about multi-time frame analysis. Same thing would be true for swing trading or day trading. You would just use like for me, I use the 15-minute entry as a swing trader, 2-hour entry and 4-hour entry to identify my overall trend if we're breaking out of stuff, and just looking at what we're looking at overall is my multi-time frame analysis, which I'll have another video for that later. But overall, that is how to use TV Pro and TO Panel. I hope this in-depth overview of how to use it is great and it helps you. If you do have any questions, always feel free to reach out to us in our Discord or at hello@trendbot.com. And yeah, that's all I have for you.